Welcome back, folks. It's a short little review on the stock index futures for today's trading on Monday. I won't be doing anything on the dollar index or the Forex market today. I'm not feeling so well, so I'm going to try to get some rest, and hopefully I'll be back in the swing of things tomorrow, and we'll do that. The left-hand side chart is the S&P 500 daily chart, and you can see we had a small sell-side imbalance, buy-side inefficiency between this candle's low, this candle's high, and the midpoint of that is consequent encroachment. That's what that line is there after taking sell side here on the S&P. Do we move higher tonight and tomorrow, drawing towards this fair value gap? I'd like to see that stay open. That would act in a manner that would be bearish, allowing for continuation on the downside. It's perfectly reasonable for it to come up into this area here, even allowing that little bit of a wick outside of the inefficiency. That's completely permissible. So nothing here has changed in terms of lower prices on the intermediate term for me. That doesn't mean I won't take a long, and it's not intended to inspire you to do one direction or the other. I'm just sharing my opinion at the moment. Same way on the NASDAQ here on the right hand side daily chart. We've taken the sell side below here. All this back and forth price action. Okay. It's reasonable for it to trade down there and then come back up into the inefficiency. It went outside of it here and got real close to trading into this one. If one of these indices are going to do either this fair value gap or this fair value gap, NASDAQ will probably be the one that does it. Should it do it, I would like to see it repel price and start moving lower from there. I don't want to see it trade there and go above, because if it goes above it, it might act as support. And then we have to start considering this area here for buy side as a draw. But right now, I'm maintaining the opinion that intermediate term, I'm hunting something for an intermediate term draw on liquidity down into this inefficiency here. 4-hour chart, say the sell side imbalance, buy side inefficiency, which is a fair value gap, trades up into it here. On the 17th, we sell off. This red area that's shaded, again, that's that daily SIBI. It's a fair value gap, specifically a sell side imbalance, buy side inefficiency. Its midpoint is consequent encroachment. That's what's being highlighted here with that line. So we took sell side on the daily chart, consolidated, took a lower low here, then rallied back up into the daily charts, sell side imbalance, buy side inefficiency, trading up into the bearish order block here and then consolidating into the close. The 4-hour chart, and again the shaded area here for the NASDAQ chart, is its respective sell side imbalance, buy side inefficiency from the daily chart. Midpoint is consequent encroachment. Note that we traded down into this small little fair value gap there. Trade into that. So you want to annotate that on your chart. I'm going to try to keep things as clean as possible, so that way you can add them to your own charts. I know some of you are probably just simply taking my charts and then writing all over top of them. You're cheating yourself the opportunity to get used to doing it as a daily routine. It's much like a form of meditation, so it allows you to get closer to the market when you create your own charts. I don't look at it as a time-saving means by just taking my charts. You want to go in and try to set your charts up like mine. It teaches you how many candlesticks do I keep on my chart. That way it helps you repeat that and get familiar with doing it. But the market comes all the way back down to the low end of that daily inefficiency on the NASDAQ, whereas we went outside of that range on the ES. Hourly chart, you can see we have a buy side liquidity pull here. Daily inefficiency again. Look how we were respecting it in here. Look at the bodies of that. It's beautiful. Then runs down, takes the sell side here with a lower low. Then rallying up to the high of the daily sell side imbalance, buy side inefficiency, specifically aiming into that bearish order block. On the NASDAQ on the right hand side, we got real close to taking its respective buy side, much like we were just mentioning over here. S&P is a little bit further away. NASDAQ, I believe, will probably draw up into that in either tonight or tomorrow's morning session. And how we trade there is crucial in my eyes. Notice that we have the higher low formed on this respective lows here. Can you see that? So if I'm not mistaken, I believe that's 2 a.m. to 11 a.m. and again 2 a.m. to 11 a.m. respectively. Don't take my word for it. Look at it on your charts. Annotate it as such. We also have a bullish breaker, which is the up close candle right before the rotation lower. So we have a low, lower low. We trade higher. We cut through all of this stuff in here because we're not supply and demand. Cut all the way through. You can see we traded right down into it there beautifully at the time that SMT was there. And we wicked outside of that daily sell side and bounce, buy side and efficiency, that shaded area in pink. And then rallied all the way back up to aggressively take out the buy side, this buy side, and got real close to taking this one here. Same thing over here. Low, high, lower low, up close candle, draw that through all this mess. Gives you an X-ray view on price. You can see the sensitivity of it right there. 15-minute time frame. Again, you can see the S&P divergence here versus the NASDAQ's higher low. And I elected to trade the NASDAQ today. And the reason why is because it was respecting its daily inefficiency. So it went down, respected this, rallied up. The body stayed inside the inefficiency. The wick went outside of it. And we broke down. And you'll see there's a breaker in here when we get in lower time frames. And the sell side was obvious as a run there. Then went to the bullish breaker, as just mentioned, and then off to the races we went to the upside. S&P had a little bit weaker market structure. It wasn't as clear, and it wasn't in as much as a premium as the NASDAQ did reach. So we had the high of that daily inefficiency reached on NASDAQ, but we did not see it here. All the while it did go to consequent encroachment, which is the midpoint of this shaded area, which is anchored from the daily chart. If you're getting lost in the transitions from one time frame to the next, the wonderful thing about YouTube is you can just rewind the video or replay it, and you'll see how all these levels are simply being transposed from the daily chart down to the lower time frame. But we're seeing that respect, look at the bodies, of consequent encroachment, which is this midpoint of the shaded area here in pink. Now, which one went higher inside of their respective daily sell side and balance, buy side and efficiency, which is that pink box here? Did the S&P go to the high end of its range? No, the NASDAQ did. So that's a better short. It went lower, attacked the sell side, and there it is. So I did two trades that you'll see they were anchored on the analysis we'll show on the 5-minute chart. All right, the 5-minute chart here on the S&P, you can see it just really was not as organized in terms of its market structure. We just weren't able to see the things that I would like to see, which you would compare and contrast over here. So we went to the high end of the daily inefficiency, the sell side and balance, buy side inefficiency. Look at the bodies respecting it. That's perfect. And that's what I'm looking for. Those are the signatures that help me decide which Forex pair, like if it's closely correlated markets like the pound dollar versus the euro dollar, or Aussie dollar versus New Zealand dollar. If I'm looking at them in the same capacity I'm doing here, I'm looking for the ones that are showing the respect of the signatures and price action. I'd like to say this is the better short because it's higher in terms of its daily inefficiency versus the midpoint here. Both are going to sell off likely, yes. But I want to be in the one that has the higher premium at the time. Even though that the S&P makes a lower low and it has the lower low for the S&P, I don't care about that. I'm aiming for the sell side here. And it goes right there, and look at the bodies. Again, which one's showing you the respect? The inefficiency, extreme high, NASDAQ. Taking the short-term low here, sweeps it twice. On this one here, I took the sell side exit, went lower, but look at the bodies. Stopping dead in its tracks on that low, wicks through, hits the bullish breaker, and then rallies. I was asleep during all this, so I wasn't able to really participate. If I would have been, I would have been all over it right there. And then once it started to trade lower in here, I used that bearish order block there, and it drops down into that level right there. That gave me my second exit or short. Market turns. If you look at this low here, which is inside this buy side imbalance, sell side inefficiency, it's an institutional order flow entry drill. Extend this range, this breaker range, extend it over, and you'll see that it's hitting the mean threshold of this down close candle. From high to low, midpoint is mean threshold. It's not consequent encroachment because it's not a wick or it's not a gap. This is mean threshold, but it's acting as an inversion level. So it's creating a level that would act as where it was over here during the sell side of the curve. It's bearish, but it's a bearish breaker that's become an inversion level where midpoint of that starts to rally. All the consolidation in here finally accelerates, takes out the high here, and then as you can see, it just moves in, gives a nice silver bullet here for 2 o'clock. The stop would be below that candle there. And it rallies up, just falls short of the high, which I'm going to go back up one time frame, or actually 2 time frames, sorry. This high is what's being highlighted. With this line here. Okay, so I got real close to that, and we move back down into these inefficiencies, and we'll see if we want to get up there tonight in London or into tomorrow's morning session. If we get back below the consequent encroachment of the Nasdaq's daily inefficiency here, we will resume being bearish. Right now, it's consolidation to modestly bullish on an intraday basis, but I'm waiting for the evidence that we're going to see a longer term short on the daily chart. So those types of trades are swing trading models. They take a little bit of time to develop, and it can have a series of up close candles form before the actual setup forms for a longer term macro short. And finally getting to the 1 minute chart. Over here we have a high, low, higher high. The down close candle here that's shaded, that's a bearish breaker. You can see we trade into that here. We trade outside of that range and right back up into it, and trading right into this lower portion of this range. So that's the high and the low, that down close candle. Extend that through, that's your bearish breaker. Then we have relative equal highs, that gets taken out in the afternoon and drops down. I didn't see anything in the S&P this morning that I wanted to participate in. Now look at the Nasdaq. High, low, higher high. We have a inefficiency here projected on the other side of the curve. It means we're running up as a Judas, sells off, so now we're on the sell side of the curve. Over here we have an inefficiency projected to the other side. Now it's going to be an inversion fair value gap. If it wouldn't have traded to the high end of this daily sell side imbalance, buy side inefficiency, the rectangle that's shaded red, we're at the high end of it right here. If it hadn't done that yet, okay, and say from the high of the shaded area to the low, if it was like this high, but only when it's high as here, and then it dropped down into something like this, I would have used that inefficiency to go long, then reach for the high end of that daily inefficiency like it did here. But because it went to it, this over here now becomes a potential inversion fair value gap. Market trades outside of it, back up in. Look at the bodies. Real close to consequent encroachment, which is half of this inefficiency. We definitely hit it there. The body's respecting it as well, and it accelerates down to the sell side and into this inefficiency. So that was the first trade based on the framework that's here. Then we had a inefficiency there. Beautiful run up in. This is a nice silver bullet short. Again, attacking the sell side here and the sell side here. The lines here, and then the bullish breaker level down here. So it digs into it. That's where I got my second trade's exit. And I was away from the charts here, and then ultimately went higher. So I only did a little bit of work today for the NASDAQ. I didn't touch the S&P, and I was able to add another $2,600 onto the live account. I showed that on Twitter. You're welcome to take a look at that. But I'm going to get some rest, and I know I'm under the weather because I'm wanting sleep, and I don't usually want a lot of sleep, and I've been wanting a lot of sleep all day today. So I'm going to get back to it, and until I talk to you tomorrow, be safe.